Good morning, good morning. It's Friday the 23rd, and this is what's on the agenda. The BOJ is hawk-ish. Gold gets really close to 5,000, and we have a new front in Trump's wall on Wall Street. Tom.
The taco relief rally was in force yesterday with gains of 1% for European stocks. Today, a little bit softer. The futures pointing lower by 0.3%. US futures, it's worth noting, are pointing higher. So we'll see how that adjusts. Gold, as Guy was saying, in focus. Could we cross $5,000 today? Currently at 4,955, up 0.4% on the yellow metal, continuing to power ahead. The Japanese yen weaker. The BOJ governor saying he is looking at the back end of the curve when it comes to JGBs. The countdown to the opening trade starts right now.
Good morning, everybody. It's just gone 7 o'clock here in London. It's a lot later than that in Japan. And this is Governor Ueda over at the BOJ, giving his press conference attached to the latest decision from the BOJ. This week has been quite the journey, hasn't it? It's been Greenland and tariffs, then BOJ, then Greenland and tariffs, and now back to the BOJ again. But that's where our focus is. A couple of things he's been saying in the press conference that have caught the attention of markets. Conditions remain accommodative was one thing, and that seemed to weaken the yen even further, a little bit further than it had already. And the BOJ standing or conducting bond operations nimbly in exceptional cases may conduct operations to encourage stability in yield formation. So reflecting on the fact that we have not seen stability maybe in bond markets of late, and we do see a bit of a flatter curve as a result of this, with short-end rates going up and long-end rates coming down.
The likelihood of the outlook hasn't changed much in the last month. I'm really surprised by that. That's the latest statement coming through from him. You would have thought, given all the political shenanigans that we see in Japan right now, the possibility of significant fiscal expansion, that the outlook might have changed. But are we going to see the BOJ leaning against that fiscal expansion, or is it just going to carry on delivering rate hikes at a very slow pace? That's the question the market is asking.
The forecasts are that wages will continue to edge higher in Japan. That's the forecast, and that growth is heading up as well. There's the domestic story in Japan, and then internationally, what does this do to the carry trade? How do we think about that? How do we think about repatriation if Governor Ueda is talking about focusing on the long end of JGBs and potential operations there? There's a big discussion about repatriation and what triggers that. How do we think about that in the context of what we've been hearing from the BOJ governor this morning?
Exactly. What pace of rate hikes do we need to see to encourage that repatriation to take place? What difference will any intervention make either on the currency or indeed in the bond markets, as he's been discussing? And meanwhile, on the politics, we have seen the elections being called and Parliament being dissolved today. So February 8th is the date for the elections.
Are we getting huge amounts of volatility in the BOJ's world? Why is it not responding to that? Why does it feel that it needs to be calm? Is it simply because we have to wait for those elections to be done and then it can start to maybe be more vocal? Because this feels like a very tepid kind of a statement, hawk-ish. Let's talk about what's happening with gold.
On the broader markets, gold closing in. What stops gold breaking?
We're so close.
We're going to be comfortably above 5,000 at this point. Goldman Sachs has that 5,400 forecast. When are they going to have to revise that higher? Really interesting that you're seeing the buying coming through from the central banks. That's a thing we've seen, of course. But to what extent, then, is the geopolitics playing into further gold purchases? Poland, one of the biggest buyers, putting another order of about 150 tons of gold coming through. Broadly across the markets as well. Two things come into play in terms of whether or not you're reallocating into gold, maybe into Asia as well. And maybe that's part of the Kospi trade that's going on. Maybe those are the two stories, two indicators of where capital is being
Emerging markets and gold are the anti-US trade, aren't they? That's where we are.
Yes, and Asia ties in with that a little bit, doesn't it, as well? We're seeing Asian stocks at a record. Is it an area of calm? It's cheaper than the US, and you get some AI exposure if that's what you're after. But in terms of the emerging markets, we have BlackRock out with their emerging market ETF saying that they've got record pace of inflows into that ETF. And MSCI Emerging Markets Index has been outperforming broader markets this year. It has been, geographically distant from the areas of tension, and that's been to its favour.
Let's talk about Wall Street and Trump's war on it. Credit cards, we've had that story. We're digesting that. What is that going to be as a credit story for the US economy? Now we've got President Trump on the debanking theme, talking about suing Jamie Dimon and JPMorgan. What I thought was interesting yesterday is that JPMorgan's share price barely budged on this, and Jamie Dimon got a big pay rise.
Yeah, look, it's an 800, more than $800 billion dollar market cap business. You're talking about $5 billion. So the amount is a drop in the ocean. But it's the symbolism when you parcel it together with the news from Scott Bessent, that the CEO of Deutsche Bank picked up the phone to him. It's the news around credit cards and the pressure there as we lead up, of course, to the midterm elections. Wall Street is in focus. And for me, there are echoes of China. I spent a lot of time there, obviously. And in terms of putting pressure on banks and other sectors to toe the party line. That's what you're starting to see in the US right now.
It's been a complicated relationship between financial services and this administration, hasn't it? Because on the one hand, there was so much expectation built in at the start that this would be a symbiotic relationship, that there'd just be deregulation, and that would be really positive. We've seen some M&A pick up on the back of that expectation. And actually, the JPMorgan team trying to lean into that by saying, we didn't debank anybody because of politics. We debanked because of regulation, and they're trying to change the conversation and tilt it in that direction to get the Trump administration to sort of push to deregulation, which is where maybe their interests align.
But it's interesting because Trump uses the stock market as a barometer for his popularity. The bank's a pretty big part of the stock markets. Is there a danger that he ends up damaging the Dow, the S&P, the whatever it is, and that ultimately reflects, he thinks, on him? I don't know. It's a slightly weird kind of relationship at the moment, and it's about personalities as well. That's what I think is so interesting here. This is about personalities. Is it about fundamentals or whatever, or is it about ego and fundamentals and who says what and when?
And Jamie Dimon is, such a long-tenured boss on Wall Street, and he was speaking in tones that were quite moderate about Fed independence of late, but clearly has a different view to the president. But probably his view is shared by many people on Wall Street. He was sort of speaking with the voice of Wall Street, it seemed, on that subject, but they've fallen out on a number of fronts, haven't they? Let's tell you what's coming up on the programme. Lots of conversations around these topics. So Naomi Fink will be with us, Chief Global Strategist at Amova Asset Management. So great place to talk about the BOJ, the yen. What do rate hikes from the BOJ this year look like? Snail's pace or faster than that? Florian Ielpo will be with us, Lombard Odier, macro head and multi-asset portfolio manager. The rate at which investors are turning away from US assets, how much should we focus on that? Fabiana Fedeli, M&G CIO for Equities, Multi-Asset and Sustainability, will be with us to talk stocks at the market open. And Mark Sedwill, Lord Mark Sedwill, former UK National Security Advisor, Chair of Rothschild & Co.'s Geopolitical Advisory. It's been an incredibly busy week on the geopolitical front. What have we learned about the requirement to rearm in Europe? OK, so on the guest front, that's the lineup, and it's a strong lineup. And from 9 a.m. UK time, we're going to be breaking the Euro area PMIs alongside UK PMIs as well. So another gauge on the strength of the Eurozone economy. At 10 a.m. UK time, the ECB's president, Christine Lagarde, of course, will be speaking at Davos. There was a pretty dramatic walkout at one point by Christine Lagarde over Davos during a speech by Lutnick. We'll see what she has to say later from the World Economic Forum. Also at 2:45 p.m. UK time, we're going to get US PMIs as well. So it is the data front as well that's drawing our attention today. And later, Mertz and Maloney talking in Rome, a little bit more closer, it seems, Germany and Italy, as the pressure on Europe continues from the Trump administration. And later, officials from the US, Ukraine and Russia will meet in the UAE for talks.
OK, what else do we need to know this Friday morning? Czechoslovak Group, I haven't said that word for a while, clearly, is set to start trading in Amsterdam after raising €3.3 billion in an initial public offering. That gives the Prague-based armoured vehicle and munitions maker a valuation of circa €25 billion, marking the largest ever IPO globally for a pure-play defence company. Bloomberg is told that SpaceX is lining up 4 banks to lead its IPO. Sources say the company sees Bank of America, Goldman Sachs, JPMorgan and Morgan Stanley in senior roles. SpaceX is targeting a listing as soon as this year. It could value the company at around $1.5 trillion. That would be the world's biggest ever listing. And Intel shares are falling, or fell, overnight after a weak forecast, and the company's warning about ongoing manufacturing problems. The company has projected first quarter revenue of $11.7 billion to $12.7 billion. Intel says low manufacturing yields, that's the percentage of usable chips coming out of its factories, is making it harder to fill its orders. Which is the biggest tech story this morning? Is it Intel kind of falling flat, or is the fact that we have got SpaceX coming through with an IPO, and that is one of a number of massive IPOs that we could see coming through this year?
And they're both kind of geopolitical and national security in some extent, because SpaceX and the role it plays, of course, and then Intel. It's difficult to take a clear line on that, I think. I mean, to some extent, the Intel story is idiosyncratic to the Intel challenges, but also, given that it has that 10% stake now from the US government, it's also part of that geopolitical push to build out foundries. The key thing for me is they still do not have a major customer for the foundries part of the business. And that, until they get that across the line, then it seems that the challenges will be there. The stock price is up 150% over the last 12 months, but of course the pressure is on the stock today.
And that was a lot to do with expectation. This was supposed to be a story about turning a corner, wasn't it? And the CEO, not that long in the job, long enough to be judged on this, but that was supposed to be the narrative, and yet we got something very different from him yesterday. Let me tell you some of the other things coming up on the programme then. BlackRock's Larry Fink has been saying that there is no AI bubble. We will bring you the top lines from Davos on the artificial intelligence boom and the race for tech supremacy. Plus, we look ahead to officials from the US, Ukraine and Russia meeting in the UAE today as political focus returns to ending that war. We have European Union leaders meeting as well on that subject. Up next, we check back in on the BOJ live press conference following the rate hold announcement. Naomi Fink will be with us, Chief Global Strategist at Ueda Asset Management. If you want to get involved in these conversations, IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
Happy Friday. We are 45 minutes from the opening trade this Friday. European futures pointing lower by 0.3% after some strong gains yesterday. US futures, though, in positive territory. The Nasdaq 100 closed with gains of more than 1% yesterday, currently pointing high by 0.2%. S&P E-minis in similar territory. We're also keeping a firm eye, of course, on the BOJ.
Yeah, absolutely. The BOJ in focus. Ueda, governor of the BOJ, is still speaking in Tokyo. We'll show you live pictures and some of the latest lines coming through there. He's saying it's hard to pinpoint neutral interest rates exactly, which is very interesting, kind of obvious. Lots of people say so, but it's interesting because a lot of people are talking about how many hikes we need to see from the BOJ to get anywhere near to neutral. And he's put a focus on April, saying the April price behaviour is a factor to consider with rate hikes. And it's interesting the relevance of that. According to the team, April typically sees more price changes driven by the start of the fiscal year and pass through on wages and the like. And so it does have outsized relevance, I suppose, to the price story over in Japan. And of course, a lot of people are asking, Guy, when are we going to see another hike from the BOJ, and could it be as soon as April?
Let's talk about the market reaction. Dollar yen 158.92 right now. The Japanese 2-year is up by 3.5 basis points. Let's get Naomi Fink, Chief Global Strategist at Ueda Asset Management's take on all of this. Naomi, the market is beginning to respond a little bit to what is coming out of the BOJ this morning. What do you make of that response?
Well, I find the response very interesting and illustrative of what Governor Ueda has been saying with regard to the yen and interest rates. As we know, the Bank of Japan doesn't really comment or intervene on short-term moves. And what we saw is kind of a response to that, bringing the long end of rates a little bit lower because of reassurance that the BOJ can act. But then on the other hand, we saw weaker yen. So it just sort of illustrates that it's very, very difficult with a blunt tool like monetary policy or even the BOJ's balance sheet to really get the result you want in markets short term.
OK, so it's difficult to finesse. Does that mean we're going to get more volatility in Japanese assets?
Well, I think just generally speaking, in the market right now, we have quite a lot of optimism, quite a lot of liquidity, and there's risk taking. But then that also gives way sometimes to volatility as well, because this risk-taking behavior is sometimes interrupted with risk aversion. So I don't think we should be discounting future volatility. And the yen weakness is part of the carry trade, which is not really a policy-driven phenomenon. It's an investor-driven phenomenon. And the other side of it is risk tolerance and potential for interruption by shocks.
Naomi, just on that then, following up, what derails the carry trade, which, of course, showed a lot of strength in 2025.
Well, I think that we have this, again, this sort of duration mismatch between the carry trade, which is very short term, and policy, which is much longer term. So what we have is a Bank of Japan, which is gradually withdrawing stimulus while rates are still very accommodative. So accommodative means it's a good environment to take risk. But at some point, we should expect the Bank of Japan to get to neutral, wherever it is. It's higher than where we are today. So if we do get to neutral, by definition, we should see less risk taking. So that is not so good for the carry trade. So it might not be tomorrow, but it's on the horizon.
On the equities front, weaker yen, stronger yuan. We saw a stronger fixing today. It seems like Chinese policymakers are comfortable with a slightly stronger currency there. In terms of the manufacturing, the export drive coming out of Japan and what that does to the equity story, is there reason to think that there's further upside on this currency dynamic we're starting to see?
Well, I would not necessarily see so much payoff from currency dynamics for Japan right now. I think there are other reasons to remain positive Japan. And those other reasons are the improving fundamentals, the wage rises, the investment that we're seeing, replenishing capacity amongst corporates. There are many reasons to be positive Japan, many beyond simply the weak yen. If we look at China, well, they're having to rebalance their economy in favor of the consumers who have been the weak point in the Chinese economy. And one way to do this is to make things a little bit cheaper for them, and letting the yuan strengthen is one way to do that.
Good morning to you, Naomi. Governor Ueda has just said that it's key for the government to secure market trust on fiscal health. I wonder what you think about that relationship between fiscal policy from the government and the market response, because it did seem to be that triggered things this week. Do you think the market is reassured? Which bit of the market should the government be explicitly talking to?
Well, so for the government, they have a different problem to solve than the Bank of Japan. The Bank of Japan, monetary policy and inflation fighting is the Bank of Japan's bailiwick. However, with the government, we're looking at walking this fine line between keeping growth going and then also espousing fiscal responsibility. So the policy path matters, not just where fiscal policy is today or even tomorrow. And here, the outlook that I would see unfurling is discipline without failure. So yes, we did see some swings in the long end of the JGB curve, but we haven't seen a market failure. This is the market returning to normal. It is normal to kind of test the boundaries in this situation, but the trend is still likely to be higher. So what we would probably like to see is this dialogue between markets and the government, with the government also responding to the signals from the market, and then also restoring confidence about its future fiscal responsibility.
Right. And then on the BOJ side, responding to government policy, responding to an increased expectation of growth, as we've seen today, and inflation, or responding with that. How many hikes do you see then from the BOJ, Naomi? How quickly do we see hikes, or how slowly do we see hikes from the BOJ?
Well, I would see the BOJ as likely to act at least as quickly as it has until now. So what we've seen is when in times of less uncertainty, we've seen 2 hikes per annum. And I know that they slowed down the pace after the tariff announcement last April, and then picked up again. So I think 2 hikes a year is kind of its normal at the moment. And that can speed up if we don't see inflation come lower or even speed up. So I think that the bias is definitely towards tightening, or at least it's towards removing accommodation, I should say, because we're not at neutral. Where is neutral? Well, some of the Bank of Japan's papers have approximated this, and there's a really broad range. I think the lower end of that, if we look at it in nominal terms and assume this 2% inflation, then you get to somewhere near 1%. Now, it's possible that the Bank of Japan may slow down if we get near there, but it also depends on what's going on with inflation. If we do start seeing it speed up, then there may be a higher terminal rate than otherwise.
Naomi, is the Bank of Japan going to offset fiscal expansion in the country? Can I see these two institutions, government and central bank, as two sides of the same coin, one offsetting the other?
Well, it's not really the Bank of Japan's job to offset fiscal expansion. It is their job to keep inflation under control. So insofar as fiscal expansion is temporary, or that it cleaves to longer-term responsibility, then the Bank of Japan should probably be able to simply guide rates to neutral without worrying too much about it. I think the problem comes if the market, for instance, worries about whether there is going to be long-term fiscal responsibility, or if the fiscal side contributes to inflation that otherwise wouldn't have occurred, then the Bank of Japan starts worrying. So I think the Bank of Japan still firmly has its focus on growth and inflation and isn't so much targeting offset of fiscal stimulus.
Naomi, how are you modelling weaker yen and higher inflation in Japan as we look at further pressure on the currency right now?
So yes, it's not a one-for-one relationship. So as the yen remains, not only becomes, but also stays weak, then you have a higher probability of importing inflation from abroad. So how long it stays weak also matters. And also just the composition of intermediate goods as well as final goods also matter. So you have a proportion of that yen weakness filtering through. Now, that proportion is probably larger now than it was pre-pandemic, according to my modeling. It's certainly much less than one for one, but higher than it was before. So I think the risks associated with the yen weakness sticking around and even aggravating further are greater longer-term inflationary risks today than they were a few years ago before the pandemic. And then they are greater risks now because the yen is very, very weak than they were when the yen was much stronger.
Naomi, does this pace of weakening in the yen, does this look like, or the levels we're approaching, 159.10, does this look like intervention territory?
Well, if we look at intervention, first of all, that is the Ministry of Finance's bailiwick. And the Ministry of Finance typically moves in when they see extraordinary kind of volatile moves. So it probably is more of a situation where if we do see the market get disorderly, the Ministry of Finance will step in. Meanwhile, if it's just a gradual weakness, that's also market signaling. And perhaps then that's a signal to the Bank of Japan to say, all right, well, we don't want the inflationary implications of this ongoing gradual yen weakness to continue. So that lends to a rate hike argument.
OK, Naomi Fink, Chief Global Strategist at Amova Asset Management. Thank you with that perspective on what we're hearing from Governor Ueda and the outlook for Japan. It's a challenging situation, clearly, for the governor. The government, and interestingly, the opposition, showing no signs of wanting to walk back on that fiscal impulse.
Absolutely. Is Japan going to provide more volatility? Are we going to see repatriation trades? These are the questions the market's kind of trying to figure out. The yen's been a huge carry trade, source of funding. Is that going to change? I don't know, but it's certainly one of the bigger risks out there that is emerging, and the volatility we've seen this week has been startling.
Yeah, and is this a story that breaks, or is this a story that just rumbles on in a particular direction? And how does the market square this? Yen weakens, inflation goes higher, then we need more rate hikes, and how do we get to the end of that narrative?
Yeah, certainly no signs that the yen was a safe haven this week with all the geopolitics coming up. Talking of which, Donald Trump's threats to seize Greenland. Off for now, of course. EU leaders, though, returning their focus to the war in Ukraine. More on their meeting next. That's coming up. This is Bloomberg.
30 minutes from the start of cash trading this Friday. European equities are down on the week. We're down around 0.9% when it comes to the stock 600. That looks like it's going to continue this morning. US futures are a little bit more positive, but at the moment it looks like we are going to see a negative start here in Europe.
Let's talk about the bond markets then. So negative start for equity markets. In terms of the bond market narrative, our conversation has been dominated, our thoughts have been dominated by what's going on in Japan. Certainly at the long end in Japan, we're seeing yields coming down. At the short end, we're seeing them going higher. So we're seeing some flattening there. European bond markets just opening up and not reflecting too much of what we're seeing in either direction, really, in Japan. Pretty flat on these bond markets here in Europe. The gilt market was interesting yesterday, though, so we'll focus on that at 8.
OK. Briefly pivoting to geopolitics, the focus on Ukraine, Russia, of course. Officials from the US, Ukraine and Russia will meet in the UAE today. That's as political focus returns to ending that conflict. Speaking in Davos, Ukrainian President Volodymyr Zelenskiy criticised Europe for its apparent lack of willingness to stop Vladimir Putin.
No security guarantees work without the US. But what about the ceasefire itself? Who can help make it happen? Europe loves to discuss the future, but avoids taking action today, action that defines what kind of future we will have.
Well, Bloomberg's chief Europe correspondent Oliver Crook is in Brussels and joins us now. Ollie, has the dust settled post-Trump, post-Zelensky? What is the mood on the ground?
Yeah, I think that on the issue of Ukraine, I mean, we took a sort of detour via the scenic route to Greenland on the geopolitical focus, but now for the Europeans, it's squarely back on Ukraine, which is exactly where President Zelensky would like it. The United States also renewing their efforts to try to get that peace agreement over the line. And just to catch everybody up, because Ukraine really has not been in the headlines over the last couple of weeks, we still have that 20-point plan that's kicking around. The Russians have not given a very sort of warm reception to that. We had a meeting between Zelensky and Trump yesterday in Davos, which apparently went quite well, and it seems that the issue of U.S. security guarantees has now been decided. But as Zelensky is pointing out, that is sort of the day after the war. There is not an answer on how to end the war, and that is exactly the task before Jared Kushner and Steve Witkoff, the envoys from the United States, that just spent the last few hours over in Moscow. We understand they sat down with Vladimir Putin for about 4 hours yesterday to discuss. The question is now, I think the only sort of main outstanding issue, which is, of course, the most difficult issue, is the question of territory, which is still something that's very difficult to break through. I don't think that we're terribly close on that, but we're going to get a little bit closer idea of that today in the UAE in Abu Dhabi, when we understand there are going to be delegations from Russia, from the United States, from the Ukrainians. The ambition there is to get all three in the room together for a trilateral negotiation. Not 100% clear whether or not that is going to happen. It might be these sort of parallel bilateral talks between the U.S. and Ukraine, U.S. and Russia, and then sort of the U.S. being the sort of go-between. But obviously, if you were to get all three in the room, it would be a significant step forward, and that's really what we're looking for, trying to bring this war to an end. And we should say Zelensky using the platform of Davos, and I think all the anxiety that was generated by the situation in Greenland, to try to light the fire a little bit under the Europeans, to take advantage of some of that unity and that strength that the Europeans obviously are in so desperate need of after they've sort of been put on full display, the weakness that they have against the United States this week.
Ollie, is the trade deal with the US still on, or is it off?
Yeah, I think it's still on. I think it's basically going to come back to the table. I think that the Europeans needed to show that they were serious, so the European Parliament will likely reschedule a vote that will sort of, I think, go through. But I think that for the European leaders here, the trade deal being back on is obviously significant, but I think more significant are the sort of lessons that they learned this week. The first is that basically there is no limit to what the United States will do in terms of threatening things. They're really totally beholden to Donald Trump. The second lesson, I think, is that maybe appeasement has sort of reached its limits, but in order to sort of to be able to respond collectively and strongly to the United States, they need to be unified. And there's a real question about the unity in Europe, whether or not that will be able to persevere in the months to come, in the years to come, not just between the nations, but of course domestically. And that's going to be the big task for the Europeans as they try to assess the path forward with the United States. And I think that after this week, no matter what's happened, despite the fact that there's a huge sigh of relief here in Brussels, I think the damage that's been done to the transatlantic relationship is certainly permanent.
Oliver, thank you very much. Bloomberg's chief Europe correspondent, Oliver Crook. That's the geopolitical backdrop. Let's think about how markets digest all of this news flow. Florian Ielpo joins us, macro head and multi-asset portfolio manager over at Lombard ODA. Florian, really nice to have you on the programme with us. This week may have left a lot of people asking themselves what they want to do with the geopolitical news flow, whether it has any relevance to their portfolio or not. On the one hand, there is this sell America narrative. On the other, people are saying that's overblown. You don't really need to do that. There's probably a continuum of expectations and thoughts about US assets as a result of this week. Where do you see the repricing of US assets right now, Florian?
Hi, everyone. Happy Friday, and thanks for having me. Well, that's the question of the day and probably the question of 2026. The way we see it is that this should be channeled through the currency market. I think the mistake would be to be thinking of US stocks as something you don't want to hold, where basically that's where, let's say, productivity at the moment is actually coming from, and with high consequences in terms of margins. Now, the channel of transmission is rather the rates market, and it shows perfectly over the past 5 days, where you see clearly how you have this surge in US political risk being priced in the market globally, and when it fades, you see that it leaves only the bond market being still bruised. Why is that? Because the term premium is progressing on the back of it. So that higher term premium is a negative force to the US dollar, and that negative force is to the US dollar is a clear indication for us of how to hedge this risk. Okay, how to diversify actually this risk via currency exposures.
Okay, so how do you diversify this risk, Florian? I mean, it looks like gold. Often, day after day, it looks like gold. But what's the more considered response, perhaps including gold?
The fun fact is, actually, gold hasn't been always a source of a hedge against this kind of risk. If you take over the past 4 years, the key dates with political risk in the US rising, and you get the average performance of gold on those days, well, from 2021 to 2024, it wasn't great. It started being great since the moment Donald Trump came back to the forefront of US politics. And this is an important point, meaning your hedge needs to be revised at regular occasions, because they can change. Now, the one thing that has changed the most, beyond the fact that gold now looks fine, is the fact that the oil market is not fine at all. It's not a way to hedge this kind of risk overall. Again, there's been a shift from the first period to the current period. And the third element is what's happening globally with EM equities, which have been faring just well, actually, in this kind of environment, and what's happening in terms of your euro exposure, your Swiss exposure, and probably not today, but probably at some point, your yen exposure. The idea is really like you want to increase your sources of performance in 2026 to harvest a larger breadth of markets. Why is that? Because you don't want basically to hedge the risk, you want to diversify it. And there's a very significant difference. Hedge is costly, diversification is not costly, and could largely improve the risk-return pattern of your portfolios this year.
Florian, just to be clear, and good morning, you see this as a fundamental recalibration in terms of how we price risk around US assets?
For sure. There is political noise, okay? And traditionally, we tend to see that political noise as something short-term. This time around, there is a sequence, and that sequence is pointing to what's usually referred to as the regionalization of the world. It's a very strong message. Basically, it says what regionalization says is basically duplication of production capacities. And as soon as you start saying that, basically what you're saying is it's a story of capex, it's a story of investment, it's a story of using funds and the cost of funds, meaning interest rates. So it's a clear change in the way we should probably approach the narrative of markets and the economy for the next 3 years again, and see that through the lens of regions, and then cherry pick which region you want to hold rather than what kind of sector you want to hold at the moment, because of currency argument plus investment arguments.
Okay. Florian, for the next 3 years, that's the time frame we're looking at then. Well, would the pushback be the US is at the forefront of tech, you want exposure, you want to be investing into US tech, so you have to be buying US dollars to get exposure to that, and then in terms of treasuries, the deepest, broadest treasury and sovereign debt markets, and you can't unwind from that easily?
True that. Now, what I will say to that is something simple. Like, if you like US stocks, and we do, we're happy to hold US stocks, but we'd be worried to hold only US stocks at this point in time. The good news is, like in most most portfolios on the planet, and in your 50-50 portfolio, 50% bond, 50% global equities, you have a large chunk already of US assets. So your neutral point at the moment, the way that neutral point has built through the past 10 years, basically, is pushing you to hold a large chunk of US assets. Us, asset managers, our job is to make sure that our clients are not faced with too much of a highly concentrated way of investing money. So the natural step is to say, well, I need to step away slightly from the US, not because I'm bearish US assets, but because I want to diversify the risk that comes with this regionalization plan and its impacts on interest rates, essentially, which channel through currency exposure, and think that your bonds usually are hedged, but in terms of currency exposure, but your equities aren't. And last year we learned the cost of that.
Florian, isn't Asia a better hedge to the US than Europe?
Well, I'll give you the Swiss answer. Yeah, there's a part of Europe which is a bit hedged, which is Swissy. Buy Swissy stocks is actually quite nice from a foreign position perspective. If you're not living or investing from Switzerland, it's an interesting play because basically you get an exposure to value, which is in itself very diversifying. Plus, you get an exposure, you get short dollar and long Swissy, which is also diversifying at times of shocks. So you see, it's actually quite an interesting play at the moment, and of course our eyes are on Japanese equities as well.
Your eyes are on Japan. Why are they on Japanese equities?
For two reasons. First reason, in Japan you have about, we discovered that this morning, about 3% core inflation, slightly shy of 3% core inflation, with monetary policy at 0.75%.
Florian, isn't the currency going to undermine my performance in Japan on equities?
It's a fair point. Now, that depends on your starting point, right? Basically, if you're moving away from Europe to buy Japanese stocks, the situation is different from if you're moving away from US stocks and to buy Japanese stocks. The point I was trying to raise is simply that Japan has the inflation of the US, but has the monetary policy of Europe. And add to that some fiscal stimulus, and you end up in a quite nice situation in terms of earnings prospects, which is basically what drives in the end not only your equity market but also your currency market.
Okay. Florian, great to catch up. Thank you very much indeed for your time. Florian Elpo, macro head and multi-asset portfolio manager at Lombard ODA. Coming up is the next Fed chair, the next big moment for the bond market.
I'll be telling you soon. No, I have somebody that I think will be very good, but I'm not going to reveal it yet. Somebody that's very respected, very well known, and will do, I think, a very good job.
Keeps telling us it's coming. Is it going to come next week? We're going to find out next. Mark Cudmore's take. This is Bloomberg.
Welcome back. This is the opening trade. We're still 14 minutes away from that opening trade. We've got European equity markets on the back foot just a little bit this morning. The FTSE perhaps a little flat, but elsewhere, Guy, we are expecting to see a bit of weakness at the start of the European day, Friday 23rd.
Just turn up the script for a second. BOJ, yen, big move. Is intervention happening? We'll come back to that in just a moment. But that is the move right now that we're watching quite carefully. We'll come back to it when we know more. Let's get back, therefore, in the meantime, to the theme of Trump versus Wall Street. Bank of America's Brian Moynihan is the latest bank CEO to push back on President Trump's proposal to impose a cap on credit card interest rates. Here's what he told Bloomberg at the World Economic Forum.
If you step back, we're all for affordability in financial products. So you guys have followed over the years what we did on overdraft fees, taking down by 90% over a course of 15 years. What we did on having a $500 loan account for $5, no interest rate, you could borrow an emergency loan of $500. 8 million customers have used that over the last several years, to give you a sense. So, and then we have a no-frills credit card, no rewards, and other stuff that people might attribute. That is low rate. It's not all the way down at that rate. So I think the question is, can we figure out a solution where you can avoid the equal and opposite reaction. As our friend Lafayette said in the Hamilton song, every action has an equal and opposite reaction. So the equal and opposite reaction we all talked about last week, if you actually make this a policy, it can reallocate credit. That will slow down spending. It will slow down credit availability, and that might not be what you're trying to achieve. So can you do something on a go-forward basis, on the limited things? And even 1 year, if you had to go reshuffle the whole deck, that would be pretty interesting and to cause a lot of change in people's views of what they have available for credit. You want people to have available for credit because that gives them the courage to spend. And so we're trying to figure out, we're all working, trying to figure out, okay, given the affordability, given the thought process, is there a way that we can do something that might help without having that equal and opposite reaction, because that would not be good. Our point is to get the credit losses down to the point where you can afford that rate, you actually can never have a charge-off. And you start to think about who can get credit.
Bank of America CEO Brian Moynihan at Davos weighing in on the Trump administration's plans around the credit card businesses and credit businesses broadly. Let's talk about what's going on in these global markets right now, and let's get to our Markets Live executive editor, Mark Cudmore, to do just that. Mark, we have spent a lot of time talking about the BOJ this morning. We watched it weaken and weaken and weaken, slides to 159, Ueda talking and talking, and then all of a sudden, the yen strengthens against the dollar, 157.51 it got to. What are you thinking is happening? What's behind these sudden moves?
Yeah, absolutely. I think an important disclaimer before I start here is that when I walked into the studio a couple of minutes ago, it was trading around 159.20. So I have no particular information on this move. But what does it look like? And bear in mind, I've traded dollar yen at banks. I've worked at banks, including Nomura. So I have some, familiarity with how intervention works. Most likely, I've got to reiterate, I've not seen what's happened here. Most likely, this is a rate check, which is normally the initial move that the MOF does, which is kind of going like, hey, where do you see dollar yen right now? And it's kind of a warning that, if you give us a wrong rate, we're going to suddenly give you a load of dollar yen. So it's kind of the first flag that they intervene. That's likely the move. How will we know the difference? Well, if it's intervention, they won't stop just now. They will drive it quite a few yen lower. I would say probably maybe 5 yen lower. And given that leverage longs are short yen, they could really start a bit of a stop loss move. So if this is intervention, then the initial dip in dollar yen won't be all we'll see. We'll see follow through later on today. So that'll probably be the first check of whether this is just a rate check, whether this is a bank pretending it's a rate check or intervention, trying to get some stops going, or whether it's actually intervention. Now, the extra bit that's kind of interesting here is that it would be kind of weird time for intervention straight after the Bank of Japan press conference is just finished. So I'm a little bit suspicious that this might be just some other player in the market trying to do a bit of a head fake here. On the flip side, the Bank of Japan, and I said this is driven by the MOF, makes the decisions here, like intervening when dollars in a weakening trend, when they know they've got the market on the side. They don't like fighting against the trend because they know it's just a waste of capital. So with the news flow this week, people want to diversify away from the dollar. We're seeing the dollar weaken across the board, except against the yen. This is a perfect environment for the MOF to kind of go, look, we want to intervene. Let's see what the action is after this. I repeat that I've done this hit not having seen this move when I walked into the studio.
Mark, would intervention work? Is this something that is going to have an effect beyond the short term, if it is intervention?
So it's a great question. Look, fundamentally, as you know, I tend to be a perma bear on the yen. I think it's a structural decline to go for a long time to come. That said, I think it'll work. So I don't think it's going to work on a super long-term basis. But in terms of a trading basis, yeah, I think this could turn the trend around for potentially months. So importantly, we're in a backdrop here of the dollar starting to weaken and people really want to get on that trade. This will kind of add to that momentum. We've just had dollar yuan fixed below 7. Kind of everything's lining up for dollar weakness. Now, if the BOJ are on board as well, it'll be kind of great for that trade. So people will push this trade. The macro community loves buying yen because they all trade off REERs, real effective exchange rates. I think that's a rubbish way to trade FX, I should say. But because it's used predominantly in the community, people always think yen is undervalued, want to buy it. With the positioning there in the market, I think this could really start a stop-loss run if the MOF get really involved. So dollar yen could go quite a bit lower.
OK, Bloomberg Markets Live executive editor with live reaction there to the moves slightly higher in the session right now, at least in the moment, 158.21 on Joel Leyen. Remember, you can get up-to-date, of course, analysis and insight from Mark and the rest of the MLive team. Just go to MLive Go on your terminal. Let's get some of the stocks to watch in the session, then return to equities. Louise Moon has a focus on some of the names that could be seeing some action this Friday.
Yes, so first up, we're focusing on CSG. Amsterdam is getting a new stock on its stock exchange today, debuting today, the defence firm, a Czechoslovakian defence firm. Now, it's a really interesting story. It's owned by a 33-year-old. You can see their profits and revenues have been soaring since 2022. They've raised 3.3 billion euros in their IPO, so this marks one of the biggest defence IPOs globally ever. It's Amsterdam's largest in about a decade. So it'll be really interesting to see how it performs as it debuts this morning. So we'll be keeping a close eye on that stock today. That's CSG. Next up, we've got BNP Paribas. They had news overnight, just after market close. They're cutting over 1,000 jobs. This is all as they integrate AXA Investment Management. They bought the company last year, a big buy for them, but resulting in some job losses. Now, BNP Paribas has done well over the past year, up almost 40%. So we'll be keeping, again, a close eye on that to see how investors are reacting to those job losses. And then finally, we're looking at Swedish telecoms firm Ericsson. Now, they've had their fourth quarter results, beat estimates, earnings up about 24%. That will hopefully, boost their stock. It's down into the red over about 12% this year. That's as they've been focusing on cost cuts. It's a sluggish market. You can see analysts are still kind of taking a bit of a wait-and-see approach. 15 holds there. So we'll see how the market reacts to that.
Louise, thank you very much. Louise Moon with the latest on those stocks in focus. I'll add into the list BASF, the chemicals giant, facing that ongoing struggle with the chemicals industry. Cars weight on that sector, of course. But FX also being cited, which is interesting. Could that be a bit of a trend as we go through the earnings stories?
It's been a pretty dismal week for European equities.
Watching the miners today, basic resources. Pricing higher again across copper, across gold.
The commodity trade's been definitely on, but equity
gold.
Trade is not, which I think is interesting. People are quite positive on European equities. If you're coming out of the US into somewhere, it doesn't look like it's been European equities this week. Anyway, equity trade is next. We'll wrap up the Friday session. This is Bloomberg. The narrative this week has been getting out of US assets, buying other assets around the world. It seems that doesn't include European equities. European equities have not had a great week, to be honest. And this morning it looks like they're not going to have a great start either. One of the reasons for that could be where we saw yesterday the US end up. We finished here in Europe. We finished over there in the United States. There's a little bit to price in. And therefore, Tom's futures look a little in the red this morning.
Yeah, slightly disappointingly so. Asia, record highs, Guy. But to your point, pointing lower by 0.4%. We did see that strength, of course, across European equities yesterday in terms of autos and banks, an upside of around 1%. But today, pointing lower by 0.4. FTSE 100 futures lower just by 4 points. You might get a bit of support from the basic resources sector, given the upside we're seeing for the likes of gold once again, and copper. Oil also modestly higher. DAX futures, though, lower by 0.5%. Anna's got some individual stocks in focus.
Yes, I have. Earnings stories to the fore, at least in the shape of Ericsson. We've got Ericsson proposing its first ever buyback as earnings beat estimates. The company talking about cutting costs, raising margin in a sluggish market. So that could be on the move at the start of trade. BASF also in focus on the earnings, but this time it's a more negative story. Missing guidance on lower prices and also a currency drag, whether that becomes increasingly a focus of earnings conversations that we have from here on. We will see. BNP Paribas is also a focus for us. The bank over in Paris, of course, seeking to cut about 1,200 roles. This is a consolidation story. So they've taken on AXA Investment Management and they are looking to consolidate around that. So those are the individual stocks that we're focused on. There could be others, but it is a Friday. This week's been a wild ride, Guy. What does today's session look like?
Quite negative, judging by the futures. Let's see if that turns into reality. Let's find out. It's time for the opening trade this Friday morning here in Europe. And we're expecting, 3/4% to the downside, depending on which particular market you're looking at. The FTSE 100 may have a slightly better performance in as much as the mining story is front and centre. Copper's pushing 13, gold's pushing 5. The metal story is off to the races. So the FTSE 100 fairly flat Stock 600, not really a reflection of Europe yet. We'll wait and see what the CAC does this morning. The DAX, the SMI and the IBEX. Let's see how weak they are. The continental markets may be a little more negative than the London market, but it does seem as if we're getting a slow start. There we go. CAC current down 0.4%, IBEX down by 0.3%. Tom, what do you got?
Yeah, does the attention switch to the Fed next week? Fed and data after all the geopolitics of this week. Top of the list across your sectors. Energy up 0.5% on slightly higher oil prices. Keep an eye on the action around Iran as well. There's a big US military build-up in the Middle East. Healthcare currently up 0.4%. Telecoms, and that's the Ericsson story, gaining 0.4%. On the downside, travel and leisure is the biggest loser across your sectors, down 0.5%. Autos, after the gains of yesterday, also losing 0.5%. Under the hood, Anna has some detail.
Yeah, Novo Nordisk is higher, up by more than 2%. That's, despite recent developments, still quite a heavy weight, so that's having an impact. So that's up by 2.2% this morning. Shares were on the rise just in yesterday's session, in fact, on the back of Goldman's lifting its price target on the Wegovy pill. So maybe that story has another day, or maybe there's something else in the mix, but that caught my eye. Yes, healthcare, it is one of those days where healthcare is one of the few sectors in positive territory.
Does defence sell off today because you've got the portfolio effect of a new big defence company coming into the portfolio? Do you need to switch out of names like Rheinmetall? I think that's going to be an interesting story. Rheinmetall is a little bit softer today, so do the defence names lose a little bit as we see the Czechoslovakian group coming into the market and being part of the narrative? So that's one story which we may need to watch out for. Is Novo Nordisk now the kind of the poster child of the Denmark story, though? Do you trade Novo as a proxy for Greenland? So good Greenland news, you buy Novo. Bad Greenland news, you sell Novo. I don't know. It's getting a little bit of that. It's felt like maybe in the market this morning.
That's a fascinating dynamic. If that is what
because
Novo
it's a name that the US sort of investors know, European investors know. I don't know. How do you trade that story? I think is one, and it looks like Novo's been kind of fairly choppy around
the fortunes
around this
have changed
week.
so much around GLPs and the catch up to Eli Lilly and the competition there on defence. Maybe this is a buying opportunity though, because what you hear from Europe longer term is a determination to, at least rhetorically, build up their defence space. We're seeing this fiscal spend coming through from Germany. So if you do see a dip as a result of CSG and the listing there today, maybe that's an opening around defence longer term.
Absolutely. We'll get an update on that listing a little bit later on this hour. Let's bring into the conversation Fabiana Fedeli, CIO for Equities, Multi-Asset and Sustainability at M&G Investments. Fabiana, very nice to have you with us. We've been thinking today about what started off at the beginning of the week being called a sort of Sell America story. If you want to look for more nuanced language, you can talk about just recalibrating the risk around US assets. How are you thinking about US assets as we bring this week to a close?
Good morning, Anna. We've seen that for a while, right? Probably from Liberation Day, we've seen a lot of our clients starting to diversify away from the US. Again, there is no market that can replace the US in terms of depth and breadth. But there is an understanding that possibly portfolios were a little bit too skewed to the US dollar, and there is a need of differentiation. And, you know, if you look at our current multi-asset allocation, we are actually underweight the US in favor of areas such as Europe and Asia, where we find a lot more idiosyncratic stories at better valuation. But we're not abandoning the US. The US still has a lot of innovative companies. You mentioned healthcare. Think about technology. So this simply has to be a better balance than a full skew to the US market.
OK, so it's a little bit of a rebalance, and it's been going on for a while. Can I widen the lens away from equities and take us to bonds? You talk about liking the unloved, long-dated government bonds in developed markets. Now, they've been really in focus recently, whether that's France or Japan. And it's not been because people have loved them, it's because people have been nervous about fiscal sustainability. So what is it there that you see to like?
So first and foremost, we've had a change in the way we think about these long-term bonds from developed markets. They used to be an important component of a strategic asset allocation portfolio. They used to be the sleep well at night component of that portfolio. They're not anymore.
Used to be the haven.
Absolutely. They're not a safe haven anymore. But you can tactically trade around the yield changes, around the exuberance or the depression around yield changes. And that is still a very valid way of looking at these long-term bonds.
What is a safe haven?
Right now, it feels like there are two safe havens. One is diversification, making sure that you're not concentrated, and the second one is gold. I mean, there is a structural story to gold, right? We not only see, obviously, central banks still buying gold, but we also see some very large asset owners, many of the pension funds that are still underweight gold, or some of them are not even allocated.
Is there a danger it goes too far? Because it's gone really fast, really quickly.
There's always a danger that goes too far. But right now, we know that some of the large central banks in the world are like single-digit allocation to gold. So there's still way to go.
Okay, let's go back to the first one, diversification. Where am I diversifying to? Is it Europe, really? Or is it the emerging market trade, which seems to be on and roaring at the moment? Is that the place I want to be?
Isn't that interesting? We go to emerging market meetings.
Yeah, it's kind of it's amazing.
Yeah, we meet people we have never met before. I think it's a bit of all of that, and it's much more idiosyncratic. So there's a lot of opportunity in emerging markets. There's a lot of opportunity in Japan. There's opportunity in Europe. You just have to look under the bonnet. You just cannot look at an index level because there are too many moving components there. That's for the stock picking side, yes.
Okay. The valuations are still pretty attractive to that point. I priced to earnings 16 on the MSCI Asia Pacific versus 22 on the S&P forward PE. So is that still a catalyst as well? Do you see that gap closing? Is that a this year story?
We don't know how far that gap will close. I mean, emerging markets is actually 13 times forward PE if you compare it to the US, so it's even less expensive. I think within emerging markets, however, there is an even more interesting trade, if you want. And that's not only emerging markets, is also global markets, US, Asia, and that's the underperformance of quality stocks. Everything that has happened over the last year has meant a lot of polarization towards technology name, possibly rightly so, defense names in Europe, but there's so many quality stocks that have been left behind. And that is true in emerging markets, it's true in Asia, on a broader basis, in Europe and in the UK.
Where does that take you, that focus on quality stocks specifically? I know you can't name names, but
absolutely.
give some more detail.
In terms of sectors, think some of the consumer staple names, think about some of the specialty industrials, think about healthcare, telecommunication. There are a lot of
And that's
companies.
a global story, or that's an EM story?
This is a global story. This is the largest underperformance in 2 decades.
How do I focus on the consumer when the consumer feels like the consumer is stretched? I can see the valuations. You look at what's happening in the States right now. They're really picking up aggressively. But I'm also hearing stories of a stretched consumer. Those two things don't sit together in my mind.
But companies are very different from each other. One thing that we have learned from the recent earnings results is some consumer companies have fared very well, against all odds, and some others have fared very poorly. Some of them have innovated their products. Some of them have not been able to find the right interface with their customers. And some of the valuations do not reflect the fundamentals.
So it's about that stock picking theme then, I suppose, Fabiana. We heard that this week, Mark Carney talking about a world of fortresses will be poorer. There's been plenty of geopolitics to talk about this week and to think about. I wonder how much that is filtering into your asset allocation. Does that mean, we talked to Florian Elpo a little earlier in the programme, and he was saying his word for it is just regionalisation, and that's been a theme for a little while. Is that reflected in the allocation that you're doing?
It's so interesting you talk about that, because this has been something we have talked a lot about this week on our investment floor. And the fact that companies are changing the way they are thinking about the supply chains and also about their interface from a customer standpoint. And you're going to have opportunities there because, yes, there is a regionalization of that trade. There's also a concentration on some specific countries. And I don't think the market has reflected that yet.
So where do we go now? Thinking about the year ahead. Diversifying away from the United States. I'm going to gold. I'm going to emerging markets. Am I really going into Europe? Is that the trade this year? I can see other trades that maybe are more attractive. Is Europe a place to put money?
I think there's certain areas in Europe that are a place to put money. So quality stocks is one. And the second one is what we spoke about with Anna, that is this concentrated regionalization of some of the supply chains, some of the consumer interfaces. Europe is going to do a lot more about that. And by the way, think about technology. Possibly Europe will not get anytime soon to the level of innovation that we're seeing in the US and Asia, but somewhere it has to go.
Okay. What about defence? We've got CSG is one name in focus today, and it's popping on that listing over, of course, in the Netherlands. It's a Czech company that supplies Ukraine. Is defence? Guy was talking about the fact that maybe defence is an area that sees a bit of volatility today on that listing. But longer term, to what extent has the window closed on defence as a proposition for Europe that did so well in 2025, or has the moves of this week opened up more opportunities there?
Tom, it's always the starting point of valuations, right, versus what the long-term trend is. The long-term trend for defense, particularly in Europe, is still strong. But there are long-cycle companies, there are short-cycle companies. We need to see when those earnings come through. And some of them might be possibly richly valued for what their potential outcomes are going to be in the near term. But the overall trend on defense is still very strong in Europe.
OK, great to see you. Thank you very much for stopping by to see us. A pleasure. Fabiana Fideli, CIO of Equities, Multi-Assets and Sustainability at M&G Investments. Corp 6 looks like this. Defence stocks are a little softer, but it's interesting that CSG is up as strongly as it is. Is there a portfolio effect there, or is it just simply we're selling out of defence names? Chips names are down. Intel maybe to blame for that. Nestle into the staples, into the food space, maybe the upper end of it, also softening. But is Novo a proxy for Denmark and Greenland at the moment? I find that kind of a question quite interesting. Look at it, up quite nicely this morning. Let's figure out what else we're watching. Let's start with that defence narrative. Louise is back.
Indeed, yes. CSG absolutely soaring on its debut, up over 24% as investors welcome that in Amsterdam. It rose 3.3 billion in its IPO, one of the biggest for defence ever. Amsterdam's largest in over a decade, so really soaring into the green in its debut today. Aside from that, we're also looking at Ericsson, the Swedish telecoms company, had their fourth quarter results, beat earnings, up about 24%, and that is really boosting the stock, up over 11% into the green. That's after a lot of their cost-cutting efforts to try and boost those margins, so that's really being welcomed. Next up, we're looking at Babcock in the UK, also in the defence industry, but it's heading down into the red. They've had a bit of a change of CEO. Shares under their CEO initially had dropped, then they soared. So investors, you know, he was welcomed by investors, but he's now retiring by the end of the year and will be replaced by the head of its nuclear unit. So not being taken well as it stands by the market. Sticking with the UK, also looking at SSP, the owner of Upper Crust. Shares ticked up slightly after their first quarter results. Seeing a bit of growth there for the caterer, for that catering company. And then finally, we are looking at Novo Nordisk, the pharma company. Potentially a bit of a day two story, ticking higher into the green. That's after Goldman earlier in the week lifted their price target on the back of their Wegovy pill, saying that, you know, this could bring some positive near-term sentiment.
OK, there's got to be a link between the baguette seller of Upper Crust and GLPs and weight loss drugs. Maybe not. There we go, Upper Crust, baguette. I didn't expect to see that in the stocks to watch today. Louise Moon, thank you very much indeed. Coming up, CSG shares, then back to defence, shining, as Louise was saying, on their Amsterdam debut. We're going to bring you the details next. This is Bloomberg.
Let's talk about where we are with European equities. We are 16, nearly 17 minutes into the session. We're not going anywhere in a hurry. It's interesting that it's been a very negative week in terms of the overall performance. A little bit of outperformance coming through from the FTSE 100 today. Some of the oil stocks are doing well. Some of the miners are doing well. Some of the drug stocks are also on the front foot. Telecoms, energy, healthcare are your outperforming sectors this morning in terms of the downside. Construction, financial services and chemicals is where we are seeing some weakness. Let's turn our attention to what is happening on the economic calendars. And page of the Bloomberg, we've got PMI data coming out of France right now. Services is where the miss has come through. Services come through at 47.9. That's down from 50.1. So contraction in French services, quite a sharp contraction. Manufacturing slightly outperformed, but we are seeing in the comp number underperformance, 48.6 down from 50. So some weakness coming through. I'm just trying to get the market PMI page to load, and we'll get you a little bit more on what we're seeing here.
Yeah, the French story is really interesting because, as you say, it's the services that's weak. Manufacturing, if anything, is is the area of slight resilience. Excuse me. And earlier this morning, we actually saw manufacturing confidence coming in unexpectedly much stronger in January. And actually, the strongest reading on manufacturing confidence we've seen in France in 3.5 years. That takes us back to July 2022. It seems as if that industry, trying to put the political and sort of budget uncertainty behind it, and carry on.
Yeah, and the budget uncertainty is cited by some as a reason for the softness across the services number. Yep. Euro-dollar currently at 117, not a significant move on the back of this. But if you get a weaker services, what does that mean for wages and for the inflation dynamics that are already pretty comfortable for the ECB at this rate?
OK, in terms of a bit of context, this is what we're getting from market. Demand for French goods and services weakened at the fastest pace in 6 months in January, and companies continue to show restraint with pricing decisions as charges were unchanged since December. So it feels slightly, deflationary is the wrong word, but we're not getting an inflationary push in any way. You are seeing a fairly sharp slowdown. Positively, however, firms' expectations for growth over the coming year were at their most optimistic since September. So the outlook maybe gets better. Is this a bottom here in terms of what we're seeing in terms of the numbers? Do they get better from here? Is that what maybe we're seeing signalled here?
The euro does seem to be focused on that weakness in services, doesn't it?
It does.
That drop.
It does indeed. Currently 117 for the single currency. Let's get to the tech story right now, because Intel shares plunged in late trading after the CEO gave a lackluster forecast and warned that the chipmaker was struggling with manufacturing problems. First quarter projections for revenue and earnings both fell well short of Wall Street estimates. Bloomberg's senior strategist Neil Campling joins us now. What stood out to you, Neil? There's been such a build-up in the stock price for Intel in recent months, and some real disappointment in terms of their ability to actually ship product to customers.
I think, as you mentioned, the stock is up nearly 50% year to date, and we're only 3 weeks into the year. But this manufacturing issue and Intel's technology issues aren't just limited to this quarter. I would say they've gone back for a number of years. In fact, the last 3 CEOs have struggled with their tech footprint, which is why some people would describe Intel as a dinosaur in technology. If you think of it in a very simple terms, they are 1/17 the market cap of Nvidia. They are years behind Taiwan Semiconductor in terms of their manufacturing footprint and capabilities. And I think the stock really has gone up on the hopes of the kind of buy America trade. But the problem is you can't just buy the technology. It takes many years to become a leader in this particular space. And I think Intel is having a reality check, to be honest, yet again, as it has for many years.
Yeah, it was interesting. The TSMC boss the other day was talking about the idea that we're going to keep the high-end manufacturing, because it's so complicated, in Taiwan. Neil, let's talk a little bit about IPOs this year. We'll talk about a defence one in Europe in just a moment, but we're expecting 3 big ones out of America. We're going to be talking about OpenAI, Anthropic and SpaceX. SpaceX is the one that maybe is the easiest to understand here and value. Is that the right way of looking at it? What do we know about what the numbers are going to look like?
Yeah, I think SpaceX is the most interesting. Obviously, it's got the Musk factor people will talk about, but actually, I would maybe controversially, but I'd say the key to SpaceX is actually Gwynne Shotwell. She is the COO of the company and has really driven this business from a concept and a dream to actually becoming an established and a complete total leader in space technology. The developments that she's managed to achieve are quite phenomenal. And just recently, before we talk about the IPO in recent days, we were already looking at a $800 billion valuation for a private placement. And the business has really taken off, unintended, in recent years. So I think it's probably the most watched of those big IPO names that you mentioned. And there still are, in contrast, lots of questions around the whole OpenAI technology and some of those circular deals that they have been involved in recent months.
Neil, thanks very much. Thanks for the analysis. Bloomberg senior strategist Neil Campling, we thank you for joining us. 8:21 here in London, 21 minutes into the listed life of this company. CSG shares opening at €32 in Amsterdam after its IPO was priced at €25. So clearly a substantial bounce there on day one. The armoured vehicle and munitions maker began trading in Amsterdam this morning in the biggest ever defence IPO. We should get some analysis then. Let's bring in Bloomberg's ECM editor, capital markets editor for Europe, Charles Capel. Very good to see you, Charles. So I suppose this is what businesses always want to see on day one. They're sort of priced to pop, I guess.
Yep.
What do we make of the day one performance?
Look, it's a pretty good pop here from CSG. They're up 28% at the open, which is, for European IPOs and for an industrial company, pretty good going. The CEO was previously seeking a valuation of about 30 billion euros. At 32 euros a share, it's 32 billion euros. So he's going to be very happy. And, I think what we're seeing here is that there's a lot of interest in the defense space. Everyone wants to be a part of this trade. And then at the same time, there's a lot of hype around it because it was a deal that was structured in order to generate a bit of a pop. It had a fixed price from the open. It was fixed at 25 euros a share, which again, there was some Bloomberg reporting saying the CEO was seeking around 30 euros a share. So it was a little bit lower, which then helps build a bit of hype. Everyone wanted to be a part of it. And then when it opened, there was a initial halt. There was a bit of an auction, and it popped right up to 32.
Charles, the nuts and bolts are important, but the headline, this is a chunky IPO for Europe in the defence space. Does this portend more to come? How important and significant is this for Europe?
It's really, really important. And yes, it does pretend more to come. KNDS, which is the maker of the Leopard tank, one of the most important tanks which is being made in Ukraine, they are considering an IPO as soon as the first half of this year. They've just appointed the banks to lead that IPO, and they're seeking a valuation of around 25 billion euros, so a sort of similar size. That's going to be in Paris as well as Frankfurt. So what we are seeing here are a lot of the private defence companies coming to public markets. Now, that's important for two things. One, for transparency, and in the defence space, that's really important. And then also because it retains sovereignty around European defence. It means that they stay in the continent, and as there's been a lot of discussion in recent days from Davos about the importance of European governments rearming, investing in their defence companies. Staying in the continent is really important.
OK. What happens next in terms of this company's life? In terms of this as a marker,
yep.
Kind of, how different a business will it be as an IPO, after an IPO?
Well, that's the thing, because the IPO is, in many ways, the end of a very long process, but it's also the beginning of a new one. And bullets are relatively exchangeable, and that is what makes up a huge amount of CSG's business. What they need to do now is to differentiate themselves. They need to make something which makes CSG a must-have because of the company, not just because it's a European defence company.
They need a moat,
exactly,
basically.
they need a moat, like Rheinmetall.
Charles Capel, excellent analysis on the IPO around CSG with that pop, as you said, 24% right now. Charles, thank you. So the defence space, a reminder with that IPO that is central to the dynamics we're seeing. We saw our previous guest, Fiaba Descend. You've got to be a bit selective when it comes to defence now, given the valuations of some of those.
Are we also going to see government stepping in and saying you can't do buybacks, you can't do big government big bonuses for your executives? That's what Trump's talking about.
Yes, we've seen that from the States, haven't we? And we thought at the time would this be something that would catch on across the Atlantic. It is interesting in that defence narrative that at the beginning of the conflict in Ukraine, of course, we saw defence gain, and then there was a sense that maybe would this fade if the war ended? Well, we haven't seen an end to the war yet. We'll see what this weekend and all those meetings deliver. But even if we did see an end, there does not seem, from a lot of the conversations we've had around this desk, whether that's with people who lead defence companies or invest in defence companies, it doesn't seem that would bring about any particular reduced interest in the defence sector. It seems as if it's so structural.
We're going to stay broadly on the question of defence and get a geopolitical lens on that, someone with deep expertise, because coming up, European defence will continue to be in focus. We're going to speak to Lord Sedwill, then, former UK National Security Advisor, about the Greenland deal, the Davos deal, and what European leaders must do next. That's coming up. This is Bloomberg. Happy Friday. This is the opening trade. We are 30 minutes into today's session. So European stocks looking set to end the week flat or modestly in negative territory after being whipsawed by the Taco and Greenland trade. The FTSE 100 is standing out today on the back of basic resources, energy as a sector as well. Telecoms more broadly across Europe doing very well. Ericsson soaring on the back of an earnings update. FTSE 100 up 0.3%. The DAX, though, is flat. The CAC 40 is up, down just 0.1%. But again, lift the hood. There's a little bit more interest when it comes to basic resources, energy and telcos. We have some PMI data, talking of Germany, that's breaking right now with the French numbers. Germany, January, manufacturing rising to 48.7. The forecast had been for 47.8. There has been a divergence in Germany in recent numbers between services on the upside and manufacturing on the downside. But manufacturing still in negative territory, still in contractionary territory, Guy, but coming in a little better than the forecast. Euro dollar currently at 117, Guy.
Still feeling negative, but not as negative.
Yeah.
That seems to be the read from that diffusion index. OK, let's talk about internals to the market. 407 down, 176 up. Volume is a little light going into the weekend, which is interesting as well. But certainly this is a market that doesn't feel like it's on the front foot. It hasn't felt like it's on the front foot all week. European equities have been under pressure despite the Sell America narrative that's been out there all week. Let's talk about some of the single names that we're watching and what is happening here. Ericsson absolutely flying. The equipment maker is having a very good day. The numbers massively meeting expectations. Nokia's trading higher as well. We're up by 3.2% there. Novo, I'm not sure this is this the Denmark trade? Is this the Greenland trade? Or is this the GLP-1 trade and the pill trade that we're seeing maybe as a longer-term theme coming out of Novo Nordisk as it positions itself positively on the price point in America on that new pill? OK, so those are the upside. Let's talk about the downside. Babcock is down by 1.5%, announcing a new CEO this morning. A.P. Moller-Maersk has been downgraded in the shipping space. Out of Leverkusen, Germany, we have BASF. If you want to know what's happening in the world, you look at German chemicals companies. They tell you an awful lot right now, and generally the trend recently in Europe has not been particularly positive. BASF down 1.23%, Anna.
Yeah, and struggling with the FX right now. And let's tell you about some of the other stories that we're focused on this morning. Bloomberg is told SpaceX has lined up 4 banks to lead its IPO. Sources say the company sees Bank of America, Goldman Sachs, JPMorgan and Morgan Stanley in senior roles. SpaceX is targeting a listing as soon as this year that would value the company at about $1.5 trillion, the world's biggest ever listing. Intel shares are falling in late trade after a weak forecast, or have fallen in late trade, and warning about ongoing manufacturing problems. The company has projected first quarter revenue of $11.7 billion to $12.7 billion. So that's the range. That's what disappointed. Intel says low manufacturing yields, that's the percentage of usable chips coming out of its factories, is making it harder to fill orders. And onto the defence space, CSG shares have soared in Amsterdam after the firm's debut, which saw it raise €3.3 billion in an initial public offering. Shares of the armoured vehicle and munitions maker opened at €32 per share, well above the offer price of €25 each. It marks the largest ever IPO globally for a pure-play defence firm. And a bit of a sign of the times, perhaps.
Yeah, definitely not tanking. Nice headline, guys. Staying on defence, EU leaders have implored their colleagues to return Ukraine to the top of the agenda. It comes as the US, Ukraine and Russia are set to hold talks in the UAE. EU Commission Vice President Kaja Kallas says Europe's adversaries enjoy seeing spats between allies.
The real issue is Ukraine right now, and that's why, any kind of disagreements that we have between allies, our adversaries like Russia and China are really enjoying this show.
Well, let's bring in Bloomberg's chief Europe correspondent Oliver Crook, who's on the ground for us in Brussels. Ollie, what can we expect then from the talks? They're happening today in the UAE. It may involve 3 parties sitting down at the same table at the same time.
Yeah, let's bring everybody up to speed to where we are today and then think about what's going on today and tomorrow. Well, let's just remember, before we took this massive sort of detour geopolitically in Europe to Greenland, the main focus had been on Ukraine. That's, of course, where President Zelenskiy would like it to be, and that is where it is now returning with these talks with Steve Witkoff, Jared Kushner, with Vladimir Putin that happened in Moscow yesterday for 4 hours. We understand that there's still the main contentious issue, that is the question of territorial concessions. As we know, this has been the most difficult part since the beginning. Not very clear. It seems seems unlikely that there's been a large breakthrough for that from those talks with Putin. So those talks will now evolve today in Abu Dhabi. We understand that the ambition here is to get trilateral talks between the United States, Russia, and the Ukrainians. Not clear if they're all going to be in the room at the same time. We may get what we've got in the past, which is parallel talks between the U.S. and Ukraine, U.S. and Russia, and then the U.S. sort of going in the go-between. But it would be a significant step if all three of them are sitting at the same table. We should also say that we have not got a very warm reception so far for that 20-point plan. The last update was done by the Europeans and the Ukrainians. It was shuttled then over to the Russians, who still have been sort of fairly negative on that. So we're going to have to wait for any developments on that. But today in Abu Dhabi is going to be the focus. Three-way talks potentially between those three parties today and tomorrow in the UAE.
As you said at the beginning, Ollie, the story this week dominated by Greenland. How have the ideas of how the special relationship, the relationship across the Atlantic, the relationship between Europe and the US changed this week?
I think they've changed pretty fundamentally, Guy. I mean, I don't think that this is a total shock in the sense of what happened. This is a sort of the groundwork has been laid for the last year. But I think this week for European leaders, everybody realized this is not a drill anymore. This is the real thing. And I think that as a consequence of that, we heard, I think, much more honestly from European leaders this year in talking about Donald Trump. Let's not lose sight of the fact that the Europeans are still fundamentally dependent on the United States on a great many different things. So there's not going to be a sort of much more aggressive tack taken. But I think that what we got, and I'll just take you some of the quotations I think that we got this week from some of these leaders, which I think are fundamentally sort of demonstrating how they actually feel inside. We had Macron saying that basically the United States is trying to subordinate and weaken Europe. We had this from the Prime Minister of Belgium. The old world is dying. The new world struggles to be born. Now is the time of monsters, and Trump needs to decide whether he is a monster. We heard also from Volodymyr Zelenskiy speaking very aggressively toward the Europeans, saying basically it is now time to wake up. You need to take your destiny into your own hand, otherwise you will be forever subordinate. He also said, and this is sort of speaks to how the gloves have really come off this week. He said every victor, and here he's referring to Viktor Orban, who lives off European money while trying to sell out European interests, deserves a slap upside the head. That is what the president of Ukraine said in front of that audience at Davos. I think that the real test for Europeans now is, after getting that scare from Greenland that has now sort of evaporated into the ether, is how unified can they stay in their response to the United States. It turns out they do have some leverage. They do have some negotiating power, as Macron has been pushing a harder line. I think other European leaders have also believed now that that is the correct approach. The question is, how long will that unity stand? And that will be the sort of determining factor of how strong Europe can be going forward.
Oliver, thanks very much. Bloomberg TV's chief Europe correspondent, Oliver Crook. For more on this very topic, let's bring in Mark Sedwell, Lord Sedwell, chair of Rothschild & Co.'s Geopolitical Advisory and former UK National Security Advisor. Very good to see you, Lord Sedwell, with us in studio. So it's been a really extraordinary week in terms of transatlantic relations. As a former National Security Advisor, how would your advice be evolving, given what we've seen this week?
Well, we could have done without the disruption, obviously, of this. The deal that appears now to be on track, this framework, was always on the table. As much military access for the United States in Greenland as they need for the Golden Dome and other purposes. That goes back to a treaty from 1951. Access for mineral resources, exclusion of China and Russia. So all of that was always on the table. So the substance after the disruption of this week is where it could have been without it. But of course, we can't ignore the disruption and the language that's been used on both sides. And this is, if we needed one, yet another wake-up call for Europe, that we need, all Europeans, European NATO, need to do more for our own defence and security.
And we heard from President Trump that the way that this was done and the language used and the tactics against Europe in this case, the aim is, well, he says that gets people's attention. Had we not focused on Arctic matters as much as we should have done? Are they suddenly much more important than they were, say, a few years ago? What's the disconnect there?
I mean, this is the art of the deal tactic, isn't it? Rough everyone up and then see what deal is available. Actually, we've all been focused on the Arctic for quite some time. As I say, I think it would have been entirely possible to get to this place without the disruption to NATO, but that is the way that he operates, and you have to listen for the signal through the noise. But it is, however, a wake-up call for the Europeans that we need to do more for our own defence. We need to accelerate all those commitments we've made. We need to integrate our defence industrial base. We need to make sure our defence capability is more interoperable. We need to work more effectively together in our own continental defence. Zelenskiy is absolutely right about that.
That sounds great. Is it going to happen?
Well, I think it will, but the question is whether it will happen at the right pace.
What's the right pace?
They've currently committed to meet this new target of 3.5% of GDP on defence by 2035. My view is that has to come forward and come forward quickly. Now, you can't just throw money because it would be wasted, but that needs to come forward. They need to work really hard on getting their systems interoperable. We have 4 or 5 times as many different systems in Europe for every tank or aircraft as the Americans have. That makes us less effective. That needs to be, they could start that work right now. And we need to start constructing the defence industrial cooperation, sort of Airbus-type models where everyone gets a share of the work. Again, that work could start right now.
OK. Is Europe ready to put its kids in uniform? Is that kind of where we ultimately have to go here?
Well, some Europeans already do. The Finns already do. The Germans are talking about it. We do need to think about getting a much wider group of our citizens involved, not just in kind of defence in the old-fashioned sense, because defence, of course, is not now about mass armies in quite the same way it was in the past, but engaged in defending the nation, in national resilience and so on.
Is that where the bottleneck is right now? Is that where the bottleneck is?
No, I don't think it is. I think the bottleneck is fundamentally political. That we have enough people in uniform. What we don't have is enough people in uniform ready to fight and with the equipment to sustain a fight and thus deter aggression.
You mentioned Germany, Mark. Arguably, Germany is now doing its bit. Is the UK?
Well, the UK has always been at the leading edge, but and we've made commitments in the UK.
But we haven't even spelt out how we're going to meet 3%.
Exactly. And so the UK needs to do that and needs to accelerate those commitments. It's no good just setting a target. You've got to have a programme and a plan and resources.
Does this government have that plan?
Not yet. They are supposed to be putting out a defence investment plan this year. It should have been out already. It's taken some time. Again, they need to put their foot on the gas.
You're familiar with the political landscape. Does this conversation this week, does it make that conversation easier, even only at the margin? I mean, if we're talking about guns and butter once again.
Yeah, well, it should. Yeah, it should. But something that has been missing is politicians really having this conversation with their publics about some of the hard choices. We spend 10 times as much on welfare, the welfare state as a whole, as we do on defence across Europe. Is that sustainable in a more dangerous world?
Because we've heard it from military voices for a while.
Exactly. But how do we engage our citizenry in this? No Western politician really has channeled JFK's famous "ask not what your country can do for you, ask what you can do for your country." They're going to have to start that conversation with the public.
Normally there's a shock.
Yep.
What does a shock look like?
Well, this week was a bit of a shock. It was certainly a wake-up call. But it is quite striking, isn't it, that because a framework deal has been agreed, and Mark Rutte has clearly done a great job on that, you can feel the pressure easing. You even see it in the markets. Defence stocks went up and down and so on in reaction. I hope we don't need a more serious shock, like a piece of further adventurism by Russia in order to really get us to the right place. We've had the wake-up call. European nations need to act.
Mark Carney was in Davos this week, Mark, talking about the risks of, talking about a whole host of risks, but talking about one of the areas to focus on as an answer is mid-sized countries coming together. On the one hand, you can see the logic of that argument. On the other, it still leaves you not entirely self-sufficient in terms of defence, if we're talking about the defence front. So how does that cooperation look? I mean, clearly there's still a NATO framework, but it is frayed after this week.
Yeah, we need to strengthen the non-American pillar of NATO. The smart reading of what Mark Carney was saying, it was clearly a great speech, is that he's talking about mid-sized countries coming together, but still as allies of the United States. We shouldn't see this as some kind of holy third grouping. But the simple truth is, in a world of superpowers and a much more contested world, mid-sized powers like the UK, like France, like Canada, Australia, Japan, have to collaborate if we're to create the critical mass to be able to stand up for ourselves together. And so Mark's basic insight is absolutely right.
Does what Trump did this week embolden President Xi and Vladimir Putin?
Well, let's hope not. But, I mean, they will have been rubbing their hands with glee at the disruption this week. They've been trying to disrupt NATO, certainly Putin has for years, and now we've seen this done to ourselves. So that was the disruption, that was the damage from this week. And as I said, we could have got to this framework without any of that. But we are on this framework. The alliance is still there. President Trump gave an interview continuing to commit to the defence of of allies. And so substantively, it's still there. And a lot of people in the American political system were as alarmed by this disruption as we were. And President Trump is, of course, the president of the United States, but he isn't the United States. There's an American political system out there as well who care about these issues.
Well, Sedwell, thank you very much indeed. Nice
Thank you.
to see you. Thanks for stopping by.
Thank you.
Mark Sedwell, former UK National Security Advisor. Coming up, is there an AI bubble? BlackRock's CEO Larry Fink says no. We're going to hear more from our conversation with the BlackRock Chief Executive next. This is Bloomberg.
Welcome back. BlackRock CEO Larry Fink says the company is expanding its AI strategy with new capital and partners. Speaking to us in Davos, Fink also says he doesn't think there is any uncertainty about AI.
I don't think there's any uncertainty about AI. There's no question of hundreds of billions of dollars is needed to build this out. The CapEx is going to drive more global growth. How that is going to be dispersed and where it's going to be really dependent on each and every government. But I sincerely believe there is no bubble in the AI space. That being said, like in everything else in capitalism, there's going to be some big failures. Okay, we always see a rotation, and there's going to be some huge winners and some losers. But do I believe the needed capital to build out AI is one of the great opportunities for the world to come? When you think about the hundreds of billions of dollars of infrastructure that's necessary, countries are going to have to rebuild their grids. We're going to have to source new powers of energy. Last night at a dinner, we had an amazing conversation on how AI is going to change science and how it's going to improve human lives in terms of medicine. But importantly, there's a strong foundational belief that AI is going to accelerate new sources of power. And if we could have cheap sources of power, abundant cheap sources of power, maybe things that we can't even think of today through AI, imagine how that could lift the rest of the world.
You announced a big, actually, partnership with Microsoft that you've raised $12.5 billion as part of this, partnership to bankroll data centers.
Yes.
Like, when are you hitting 30 million?
30 billion, yeah.
30 billion. When's that coming?
Well, we raised 12. We announced 12.5. We're actively raising more money. We did already making an acquisition in Aligned Data Centers. The total enterprise value was $40 billion. But not only is Microsoft our partners, MGX of Abu Dhabi, NVIDIA is one of our partners, XAI is one of our partners, and so we have an incredible partnership group in building this out, and we are seeing more and more opportunity working alongside some of the best hyperscalers, and so we see nothing but opportunity, and that but we have to be judicious and we have to be thoughtful about it. But I'm very encouraged about what AI can do for humanity.
BlackRock CEO Larry Fink speaking with Bloomberg's Francine Lacroix in Davos. And Francine joins us now, anchor of The Pulse, of course. Fran, it's been a busy week. You probably talked less about AI than you thought you might have done, given all the developments on the geopolitical front. But it's good to know that some of those AI conversations stood standing intact. What stood out from your conversation with Larry Fink? And I guess he's had a pretty good week, has he, given the amount of attention on this week's Davos and his new role there?
Yeah, and 100% good morning. Larry Fink, I think, has had a great week. I mean, he managed to actually convince some of the most powerful people in the world that had never come to Davos to come this year. We had Jensen Huang of NVIDIA, we had Elon Musk, and we had many others that for the first time came and speak at the Congress Center. Now, when we were getting prepared for Davos 2-3 weeks ago, everything was about AI. Every panel, even on growth, was with AI chief executives. If you look down Promenade, so this is the main road just outside the Congress Center, you could see like AI, ROI, and everything was basically about the business model and data centers. And then, of course, that got shifted because of geopolitical news. But remember, last year was the surprise of DeepSeek. This was like 3 days after Davos. And I think last year was really about investments in data centers. It was investments in building the most powerful technology to compete with, or to make sure that China could not compete with the US. And this year felt a little bit different because it was really about, well, everything that had to do with ROI. So it was, money and revenue. I mean, I overheard this wonderful conversation between Dario Amodei of Anthropic, who was a bit of the star of the show when it came to AI, with a big investor. And, he overheard this person say, like, I just don't know how revenue works, because if you spend so much money building it, who's going to buy it at the other end? And I know they're going to have lunch, because not a lot of people speak truth to these chief executives and founders. And so that's really interesting, but it's also been dominated by geopolitics.
OK, that's the colour, that's the insight. Bloomberg's Francine Lacroix, an amazing week, of course, on the ground for us at the World Economic Forum. Francine, thank you. Here's what else to think about today. From 9 a.m. UK time, Euro area and UK PMIs. We've had some numbers, of course, coming through from France and Germany. 10 a.m. UK time, we're going to hear from Christine Lagarde. And we're going to get US data as well, PMIs, later in the day. Merz and Maloney, a meeting in Rome. And we are expecting potentially a meeting between US, Ukrainian and Russian officials in the UAE later today.
OK, we've seen some PMI data out as well, which we need to focus on too. There's been a few stories that have been breaking during the show. The end's one of them. That looks like we've kind of put it in the background. But the PMI data is really interesting. Business activity in France sinking for the first time since October, driven by the services sector. Political turmoil, certainly over the country's budget future, weighing on demand. Jean Delbar, economist at Bloomberg Economics, joins us now. Walk us through the numbers. They don't look great, but the outlook looks a little better.
Yeah, exactly. I mean, I would be a bit cautious around the results of the PMI survey. The headline figure is pretty bad. Some details of the services components are pretty bad as well. But political uncertainty is creating so much noise in France that it's difficult to have a clear view on recent cyclical surveys. If you look just this morning, we had the INSEE manufacturing confidence that reached a 3-year high. So that shows you how many noise there is in these surveys. Don't get me wrong, I'm not saying that the political uncertainty is not weighing on the activity, on the economy, but it should be mostly concentrated in the last quarter, in the fourth quarter of 2025, and we expect the activity to recover as political uncertainty recedes over time in 2026.
Yeah, Jean, what are we expecting from the French economy this year then? Because if political uncertainty recedes and if a big neighbour next door is spending a lot of money, not just on defence but also on infrastructure, how does that flow into the French economy?
So actually, we expect the French economy to slowly rebound and to recover from 2025 and to grow by 1.1% in 2026. That will be driven by, as I said, lower political uncertainty. And actually, we are expecting the French budget to pass over the coming weeks. So that's pretty positive. The fiscal drag will be lower than expected. So that's also pretty positive for the French economy. There remain some major uncertainties around investment that boomed over 3Q 2025. What will happen in 4Q? What will happen in 2026? We have seen that the spread has tightened a lot, so it could be positive for financing conditions. So a lot of uncertainties, but still we expect the French economy to slightly recover in 2026.
OK, we'll see if that recovery comes through despite the political uncertainty. Jean Delbar, economist at Bloomberg Economics. Jean, thank you. Here's what else to think about for this weekend then. Finally, we are there after a tumultuous week, of course, in terms of what's been happening on the ground in Davos. But there's some sporting action, there's some film action as well. There's Sundance Film Festival, Paris Men's Week, Fashion Week as well. So I know Guy will have an eye on.
Straight on the Eurostar.
Can't wait. It's going to be amazing.
Absolutely.
Tennis looks good. X Games starting.
That's dangerous.
The prelude to the Winter Olympics, which are about to kick off in Milan Cortina.
Looks petrifying.
Looks quite exciting.
Exciting. Different risk tolerance. Tom, you will like this one. Over at Sundance, there is a documentary about concrete, and I know you think that I'm obsessed with the real economy.
This is where you're going.
Yeah,
with your focus.
I'm definitely tuning in.
A documentary on concrete. We didn't get to show Crocs and Guy's potential new Lego Crocs. We have a picture of them. I can see Guy in these. He's a Crocs fan.
Will they be on the catwalk at Men's Fashion Week? I predict not.
That is it for the opening trade. The Pulse is up next. This is Bloomberg.